In this video, we're going to cover the 10 counties in California where prices are falling the fastest. And yes, number one did drop almost 14% in 1 year. So I want to dive into some data with you guys today. The timeline that we're looking at is rolling 3-month periods to review those year over year to help smooth out any anomalies or big jumps in the data. We're looking at median sale price as reported by Redfin, compiled by California Housing Collective. Yours truly. For California, there are 58 counties. Of those 58 counties in this data set, 26 declined in value in the state over this 1 year period, 32 increased in value. We're going to go over what the numbers look like for the entire state at the very end after we look at the top 10 counties or bottom 10 counties, starting with number 10. Sonoma's coming in at number 10 with a drop of 1.86%, which is a very null piece of data when you look at the fact that the inventory rose. So what you would tend to, or what you would expect to see in a county like this is prices are falling because inventory is rising, which results in more homes sold. So usually, like, those are the three components of supply and demand: is supply, demand, and price. So if prices are falling because supply is increasing, it should mean that demand should follow as well. But what we're seeing is basically demand stayed stagnant, but inventory rose, which caused prices to fall. That's pretty normal. And that is the rule that 7 counties on this list follow, with 3 that are rule breakers and 1 which is just rough. Coming in at number 9 is Solano County, which is in the Bay Area, minus 2.28%. Inventory increased to 12.5%, which is a pretty normal number for California over the past year, but home sales actually decreased. This is a little bit of a different data set and an example where prices are declining, inventory is rising, but activity is falling as well. What this usually means is that the market is still overpriced, so people haven't jumped back in, which is why home sales are declining. So inventory, as it continues to rise, should push prices down a little bit further, which will inevitably cause demand to pick up whenever the price comes down far enough to where the demand is like, yes, we're in, we'll already start buying again. So number 9, Solano County in the Bay Area. When we go to number 8, which is Humboldt, up in the North Coast, 2.5% drop in 1 year. A 20% increase in available homes resulted in an 11.5% increase in homes sold. Again, a normal data set. Prices come down, inventory goes up, home sales increase. Thank you, Humboldt. Number 7 is Marin County. Marin County is the most expensive county on our list. And you may be noticing a geographic trend here between these. So you've got North Coast, Bay Area, North Coast, Bay Area. But now Marin County, since it's dropped 2.78% over the past year, is a very affordable $1.43 million for the price of a home. I live in Southern California. I'm in Huntington Beach specifically. $1.4 million isn't that crazy, considering I think Orange County's median price is about 1.1. But whoa, 1.4 is a big number. Inventory is climbing. Home sales are following that number as well. But wow, I mean, you have to be doing pretty well to be working in, or to be living in that area. Number 6, we went from the most expensive county to now the largest county on our list. If you look at the available homes, we're up to 3,200 homes on an average month in Alameda County over the past 3 months. But they've dropped 4.13% over the past 3 months as well. They're lost $46,000 in median sale price during that time period. Home sales are basically stagnant at this point as well. So that is our largest county on our list, Alameda County. Also, again, in the Bay Area, you're going to see that same geography very consistent throughout this map. And we're now in the top 5 with Santa Cruz. This is the double whammy of tightening inventory. So prices fell, which normally means inventory is going up, but it's not. So prices fell, available inventory or available homes fell, and more homes are being sold. So I would not expect Santa Cruz to be falling for very long. I would expect in the next 3 or 4 months, they might revert in the data set to the top 10 that are rising. Because if you have prices going lower and inventory going lower and more homes being sold, they'll inevitably push prices back up. So Santa Cruz is in the bottom 5 for now. Probably won't be for long. But that trend is going to continue here with number 4. Calaveras. This is our first in northern San Joaquin Valley. So almost a 5% drop. So 4.77% year over year. inventory is dropping and the homes being sold are increasing. So apparently the price is attractive. I might be a little bit too low considering you have inventory shortening and activity going higher. So I'd expect Calaveras to start jumping in here shortly. Next up, we move to Mendocino, which is back to a market that is stabilizing. I wouldn't say like a free fall, even though it's a 5% drop year over year. And there's a reason why. So when you have prices going down and inventory and home sales going up, that tends to be a good thing. So California is famously overpriced with real estate, but it can't drop like 50%. If it drops 50%, everybody in the world will try to move back to California and push the price right back up. So we can't fall that far. We might be able to hit like 20 or 30% in the next few years, which is wild. But in Mendocino, like let's say you're a housing professional. So I'm a contractor down here in Southern California. I would love to see this happen in Orange County. Why? So when prices fall and there's more activity, there's more people buying and selling and moving, it just means there's more opportunities for me as a housing professional. Same thing by real estate agents, interior designers, brokers, anybody who's associated with the housing industry. This is good. For people who are looking to buy homes or rent homes, this is also good. Prices are falling and there's more inventory available. So this is a net win all the way around. Now, if it goes from a 5% drop to like a 50% drop, that's where you get into unhealthy territory. But Mendocino is a great example of stabilization and what I will see in more counties throughout the state coming up. The exact opposite is true for San Benito. So in the, what's that, Central Coast, an 8% drop year over year. That is a lot of value lost, and inventory is going down, and home sales are going down. I do not have an explanation for this data set, and I'm hoping somebody who is more familiar with San Benito can clue me in. It's a decent sized market, not a lot of activity, and prices are going down pretty dramatically. So if anyone can tell me what in the world is happening in San Benito, I would love to hear it. So please, if you're in the area, let me know. This brings us to number one, which is an outlier in every case. Lassen County, California, up in the Superior California region, almost a 14% drop, 13.92% year over year. That is an outlier. It is the largest drop. It is the only double-digit drop year over year, but it's also an outlier as the cheapest area and the smallest county on our list. So only 24 homes being sold, even though that number did increase a little bit. It's the smallest inventory with 170 available homes on the market on average per month in the area. And the median price is now $225. It is insane. So if you're comparing that to Marin, which is what, $1.43 million is the new lower great deal of a median sale price, to Lassen County, which is at $1.2 million cheaper. It's fascinating. So Lassen County is bringing us to the number one with almost 14% drop. Now I want to take a look at what's happening in the state of California altogether. Here's the data sets. We want to look at rolling 3-month periods and how they move over time. What we're seeing with median sale price is for the first 6 months in this data set, we're seeing 5.5% increases year over year, where prices are still jumping very quick. That is not necessarily unhealthy, but it's not great either. So again, we're looking at year over year comparisons. And again, appreciation is a typical 3 to 5%. So the first 6 months of this year, we're in like a pretty typical 3 to 5% sort of range with the year over year appreciation. If you look at the most recent 6 months in the data set, we're negative for 3 months. Now we're at less than 1% appreciation. The story is really being told with the available homes. So the big jumps came the first 6 months of this data set, where you're looking at 24 to 30%. And then since that, the last 6 months of the data set is just steadily declining. So there was a pretty massive spike in newer available homes. So just more inventory being added to the market, which didn't push prices negative. It just started to put a cap on how much prices were increasing. Now what we're starting to see is, since the jumps in inventory are getting smaller and smaller, we're still not seeing prices go negative consistently, but we're seeing a deceleration in price growth. Except for in the last 3 months, we've seen a little bit, so less than 1% on average. But as inventory increases slow, median price decreases will slow as well. So if inventory goes stagnant or negative, prices will go back up. I've heard some people say that California should have a 30% drop in median price to be a more healthy, balanced market. That would require the available inventory to jump 50 to 70%. It is technically possible, but there would need to be a very big domino to fall, which I do not see happening. You could have government action. There are some policy changes that I think could be very beneficial to help even out the market. Um, Other than that, like I don't see anything really happening anytime soon that would help inventory grow and prices fall in a way that's healthy for everyone. Again, I'm a Californian, I'm a resident, I'm a housing professional, I'm invested in the health of this market. The California Housing Collective, we believe that the industry is better when we all work together, which is why we want to study the data. Also love reporting it. I'm a little bit of a nerd and you're a little bit excited about these things. I love sharing it with you guys. So if you got any value out of this, please like or comment or share. If you have questions or if you have specific feedback that would be helpful for the other viewers, please post it. I would love to engage with you. And if you can also provide more context for what's happening in the different counties in California, please become an active participant, an active commenter, so we can all work together to have a better, stronger, healthier California housing industry. Thank you so much for watching, and we'll see you guys in the next one.